Hello and welcome to CATEX TV. I'm Tom Bailey in London. It's 4:30 p.m. in London, 11:30 Eastern Time and 12:30 in Bermuda. And now to the news. According to the Wall Street Journal, insurance companies across Europe are sitting on large portfolios of bonds issued by financially shaky governments and banks, raising concerns that some insurers could fall victim to the continent's financial crisis. Before Europe's financial crisis erupted last spring, many insurance companies gorged on bonds issued by governments and banks from around the Eurozone. It seemed like an easy and low-risk way to generate higher returns for investors and policyholders. Today, though, Greece is teetering on the brink of default, and many investors fear that Ireland, Portugal and even Spain could follow suit. Meanwhile, troubled banks increasingly are imposing losses on bondholders as a way of avoiding taxpayer bailouts. The result is that some European insurers face the prospect of heavy losses, which could erode their financial strength and trickle down to customers who hold life insurance policies, according to industry experts, regulators and analysts. And because of the industry's limited disclosures, it's hard to pinpoint exactly which individual insurers are vulnerable and the extent of those vulnerabilities. Now to the storm weather. There are no current active storms. However, if you look at the chart that we've got up now, you'll see that the area that's been highlighted in orange, the cloudiness and showers, are accompanying a broad area of low pressure over the eastern bay of Campeche. It's changed little in organization during the last several hours, although the upper level winds are not currently conducive for significant development. The winds are forecast to gradually become more favorable during the next day or so. There is a medium chance, that's about a 50% chance, of this system becoming a tropical cyclone during the next 48 hours, and as it moves west-northwest at about 5 to 10 miles per hour. The US Air Force Reserve Unit Hurricane Hunter plane is scheduled to investigate the area this afternoon, if necessary, regardless of development. Locally, heavy rains and gusty winds are possible over portions of the Yucatan Peninsula and southeastern Mexico later today. These rains and wind will gradually spin westwards into northeastern Mexico during the next day or so. And elsewhere, tropical cyclone formation is not expected during the next 48 hours. The next picture we've got for you again is one of these. It's one of these images that just shows the variation or the difference from the normal for this time of year of sea temperatures. And as you can see, anything that is not light blue, anything that's yellow or red, is higher sea temperature than normal. And as you can see, the North Atlantic is essentially warmer than it typically is this time of year, which is conducive to the development and growing strength of hurricanes. To New Zealand now. AMI, which is Christchurch in New Zealand's Christchurch's largest residential insurer, could be uninsured as soon as Friday this week, as officials scramble to put reassurance in place in the event of a fourth earthquake. AMI CEO John Blamforth restated today the company's position that it was confident that reinsurance would be in place before Friday, but said the company would not publicly comment on the situation until next Monday. He said there are still some contractual issues that need to be signed. Blamforth downplayed concerns about policyholders being at risk in the event of another quake after Friday. Although Blamforth conceded a deal had not been finalized, however, he said it was almost complete. He said the situation with our reinsurance is that the program placement has progressed well. 2 components of the program are already in place, and the third component is progressing exceedingly well, and we are confident that will be finished by the deadline of the 30th of June. The urgency of obtaining reinsurance cover became clearer since Civic Assurance revealed yesterday it could not get reinsurance. AMI is the insurer most exposed to further Christchurch quakes. If it does not find reinsurance by Friday, any new quake damage would have to be paid for out of the government's credit line behind AMI. In a June the 8th press release, AMI chairman Kerry Nolan said the company was in good shape and would have finalized comprehensive and affordable reinsurance cover for its normal business and for any future catastrophes come the 1st of July. Nolan could not be reached for comment this week, and repeated calls placed to senior management at AMI and its board members were not returned. CEO John Blanforth, who has recently travelled to Sydney, Bermuda, continental Europe and to Britain to put in place a reinsurance program, claimed in AMI's June 8th release that reinsurers were not deterred by the earthquake situation in Canterbury. We'll keep you posted on that development. It's quite an interesting one to watch. This is a story out from S&P, also about New Zealand. It says that reinsurance rates may triple at July the 1st, 2011 renewals for New Zealand-only placements as a result of the Christchurch earthquakes. For joint Australian-New Zealand programs, the increase will be less, more on the order of 50%, S&P notes in a separate report. Prior to the Christchurch quakes, New Zealand enjoyed a favourable pricing, and some insurers have benefited from discounts for loss-free records, which will no longer be available, S&P says in a release. And now to some company news. Bermuda-based Bermuda-based specialist insurer Hiscox said it estimates net claims arising from the April and May tornadoes in the US to be approximately £35 million. This is based on insured market loss of $15 billion to $25 billion. Estimates for 2011 catastrophes announced in the May IMS are unchanged. As there continues to be considerable uncertainty around the Japanese earthquake, Hiscox is reserved at the upper end of its modelling range, and that range, as published in the May IMS, is between $60 million and $150 million. 2011 is proving to be another active year for catastrophes, with reserves in excess of £200 million for the year to date, and that was approximately £100 million at the same time last year, so it's double the 2010. As predicted, these recent catastrophes are having a positive effect on reinsurance rates. In the US catastrophe business, there have been rate increases of around 10% due to the cumulative effect of recent events and the introduction of the RMS 11 risk model. In this environment, Hiscox is maintaining underwriting discipline, shrinking in areas where rates are under pressure, and maintaining a focus on profit over volume. As reported in May IMS, written premium reduced by 8% in the first quarter, and this trend in earned premium will continue at the first half year. Reinsurance cover remains substantially in place for the upcoming US hurricane season. The group's strategy is to reinsure catastrophe exposure predominantly on a pro rata basis. And also reporting on losses from the April and May storms, AIG's property and casualty operation Charters may have amassed $500 million in losses from tornadoes and severe storms in the central and southeastern US in April and May, according to JP Morgan Chase analyst Jimmy Buller. And he said that in a note to investors on Monday. AIG has yet to issue such an estimate. Mr. Buller wrote, high catastrophe losses are likely to pressure property and casualty margins in the second quarter. Such losses for AIG would rank well behind Allstate's estimated $2 billion in losses from the storms and State Farm's outlay of $1.75 billion, as most of AIG's US property and casualty sales are in commercial lines. Charters posted $1.7 billion in loss from the Tokyo earthquake and tsunami and other Q1 catastrophes. And more company news. Marsh McLellan Companies, the global insurance broker, said yesterday that it had begun a tender offer for up to $500 million in its 5.375% notes due on 2014 and its 2015 notes. Essentially, Marsh McLellan is buying back $500 million of debt. Now, there's been quite a lot of capital issuance recently. We heard yesterday that Ascot Underwriting, the Lloyd's underwriting operation, has increased its stamp capacity. Now, Bermuda reinsurer Maiden Holdings Limited has raised more than $100 million on the capital markets. The company said last week that its US holding company, Maiden Holdings North America, has closed its offering of $107.5 million aggregate principal amount of 8.25% senior notes due on 2041. That's quite long-term debt. And finally today, news from London. Lloyd's underwriter Catlin is backing a new managing agency called Arrow Underwriting, which is launching today to focus on the UK and European schemes and affinity market. The MGA is a creation of casualty writer James Bright, who has experience in London, UK regions and Europe. Bright, who is the son of former independent chief executive Michael Bright, will become chief underwriting officer. The MGA will offer regional brokers a range of specialist property and casualty products. Bright said, Arrow has been nearly 12 months in the planning. I'm delighted that we've been able to bring together a team of like-minded professionals with a vision to the leading underwriter and facilitator of schemes and affinity business in Europe. Arrow has appointed Martin Gray as chairman, who will be involved in the London insurance market, who has been involved in the London insurance market for over 40 years. Gray said, I'm thrilled to be part of this exciting new venture and look forward to working with James to build a team of underwriting and business development experts who can help brokers with new and exciting schemes. Well, that's all from us today. We'll be back with you at the same time tomorrow. Until then, thank you very much and goodbye.